where I share my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're going to go through the markets. We're going to talk about NVIDIA, what's going on with the markets, and whether we're going to continue to decline. And we're going to go through a bit of talking about Bitcoin. Let's get into tonight's video. Okay, folks, got the Hoosiers, go Hoosiers. First time we've ever had a football team, so I've got to celebrate. A good Indiana boy. Anyway, folks, lots going on in the markets, and I wanted to come up because I know folks are getting nervous. I've seen some comments around Twitter and other places on Substack that folks are wondering what's going on and where this thing's going to lead to. We're looking at the AI bubble talk everywhere, and of course Bitcoin. And I'm going to focus it initially. I just want to get this Bitcoin thing over. If you saw my special report I did, it had nothing to do with as far as where I think Bitcoin's going in price. The whole article was based on trying to educate people to understand who's setting the price now. And one of the things I want to start here because I think it's important for all the markets that we follow. For instance, what's the first thing you do when you're looking at a stock if you're a real stock analyst? What you're going to do is look at the float, because the float is traded and turned over all the time. You look at float turnover, how often does it turn over? And because that's what sets the price. The long-term holders of the stock or Bitcoin or any of those have no relevance whatsoever. They're not even in the game as far as setting the price. And what we've been seeing lately, I've been kind of talking about this on Substack off and on for the last couple of months and maybe longer. It's interesting to see what's going on with Bitcoin, because everybody's out there telling you to buy. Everybody's telling you it's going to $1 million. And I related this to a couple times in talking about the old trading floor days. We had we had different kind of traders. The real quiet guys were usually the guys making all the money. They didn't brag. They didn't go and promote and all that. And then you've got the guys, the promoters, and that's what you see right now. Think about how many podcasts, everything Michael Saylor's been on in the last month, telling you all this stuff. And I'm going to play 2 clips. He was on Fox earlier today. They're short clips, but I want to talk about what is, in my opinion, what's being exposed here. But let's talk a little bit. I want to go over to... let's go over here. This is the article that I wrote. If you didn't see it on Substack, it says basically what's happening with Bitcoin, in my opinion, and I've been saying this, you folks have heard me say this for a while, is that, Bitcoin, when you brought in the ETFs, I've been saying you brought the bad guys in. Well, I wrote, 8,800 words of who the bad guy is and what the effects of what's going on here. And I think I want to point out a couple things. And I love how it started this. What if everything you thought you knew about Bitcoin was wrong? And I think that is the case. Decentralization. Well, it's been centralized because you brought in the ETFs, you brought in the market makers, the ARBs, that entire Wall Street culture you brought in, including the government. You got Trump's wanting to be the crypto country of the world. Meanwhile, his sons, and he is in the business. I've got a little bad feelings about that. And, but this is what's interesting. I think what's happening is the promoters are out everywhere. Tom Lee rattling on and on. He just got a huge deal doing this Ethereum deal. You got Saylor. But I want you to listen to Saylor, and it's going to trigger me to go into this conversation that I had. Hopefully, I'm going to play this first clip, and then if you would, comment that you can hear this. Okay, it should be fine, but we'll start it over here. Here we go.
You know, Bitcoin's been around for 15 years. It's had 15 major drawdowns. It's always come back to a new all-time high. If you zoom out, this is just par for the course. This is normal in the life cycle of an emergent transformational asset class, and it's a healthy thing. It clears out the tourists, the leverage, and the weak holders, and sets the basis for the next rally upward.
What if Bitcoin goes down more, though? Is there a point on the downside that triggers some sort of a domino effect?
The company is engineered to take an 80 to 90% drawdown and keep on ticking. So I think we're pretty indestructible. Our leverage is, you know, in the level of 10 to 15% going towards zero right now, which is extremely, extremely robust.
Okay. Let's talk about this. One of the things that I find very interesting is why would you structure a company to take an 80, 90% hit? I mean, everybody that's going to $1 million. And yeah, maybe they're buying all this stuff, but it's interesting that these guys are everywhere right now, promoting, trying to get everybody in the world to buy into this narrative. I mean, you go to every millennial influencer, everybody that's on Bitcoin, covering anything. This is the story. It's a culture, right? And I've been around these markets for a long time. So basically, I saw some girl go, well, you know, this is your opportunity, basically. And she was probably a Zoomer. I would call her about 25 years old. She was on Fox. I'm not sure who she is. She's probably an influencer of some sort. And anyway, basically, nobody needs to work anymore, folks. Everybody go put $10,000 in Bitcoin and go enjoy your life because it's going to $1 million, right? So whatever that multiple is should get you way down the road. And I'm just sitting here as an old geezer, been around the markets a long time, just wondering what all this is about. Why this big promotion? Fox, I mean, they are everywhere. It's like maybe it's the tulip thing all over the place. I'm not predicting that. I'm not saying that. I'm just asking the question, why are these guys everywhere? Why are they promoting this? I have good friends and people that I know that I've known for a long time, and they were telling me about a year ago that right now, as we're sitting there, we should be trading at somewhere between 200 and 250,000 on Bitcoin. And last I looked, we weren't. You know, we were at 90 something, 92 exactly. So, you know, what is all this? And my concern here is that they're calling it somehow this $2 trillion asset is going to get split up and it's going to be worth, you know, $1 million plus. Kathy Wood's doing it. They're all doing it. And I've never seen anything like this. And I just needed to talk about it. Don't really have any answers, but if I go back to my screen over here, in the article that I put up there, is all I was trying to do is this was a couple main points I want to make here. The day Bitcoin invited Wall Street in and lost control of its price. If you go through this is actually, all it's telling you is that the market makers, the people that control the float, all of the Wall Street types have not only come into this, but actually have controlled the price. And you hear all of these guys, Cardone and Saylor and you know, Tom Lee, everybody, we're buying. Meanwhile, the price is just collapsing, okay? So I want to point out something here, and I'm not sure what you folks will think about this little segment, but you'll tell me in the comments. But, you know, these guys are the big promoters, and all of them are telling you to buy, but it goes down, right? Like 25, almost 30% now from the highs. But then we go to NVIDIA, which we're going to cover as well. what's going on with NVIDIA? They're telling you it's a bubble, it's a bubble, it's a bubble, and it's going straight up while they're telling you that it should be going down or it's a top, all that. It's just an interesting viewpoint because we live, I would say we live in a place in this world now that it's just, you can't tell. The old Memorex, it was like, is it Memorex or is it real? You can't tell the difference. Well, they're trying to create a narrative, in my opinion, to get everybody in here. And the promoters on the trading floor days, that's what they were trying to promote. Hey, come in and join me on this trade. They figure if they can get enough people buying, then it would go up. The more they promote, the weaker that Bitcoin gets. And like I said, the more that they go against NVIDIA, I remember when it was 1 trillion and change, I was involved in a conversation. It was a bubble then it was 2 trillion, 3 trillion, 4 trillion. And all along the way, it's been a bubble. And now that's the circular investment story that's going on. And, you know, maybe it is a bubble. But my point is that the talk does not match the walk. So I'm still very concerned with, I will say this, that I've made this comment, and I'll make it publicly here, is that as soon as Michael Saylor gets wiped out, you can buy Bitcoin. Whatever's going on here is there's something very wrong, is all I can say. And when this guy's on every TV show he can, telling you that my company can go down 90%. Imagine a CEO going out there and saying, well, we can go down 90%. We're just fine. I mean, what is that? I don't understand this. So it's even the biggest Ponzi scheme ever, or these guys are way smarter than I'll ever be, especially at my age. So anyway, I think I'm done, but I needed to say that. But if you haven't read the Substack, I'll put the link to this in this video when I'm done tonight. But it's just, it doesn't make any sense. I think I'm going to try to find this one statement that I made. Bear with me while I find it, because if you only even look at the italicized and bold words that are, you'll get the whole story for the most part. If you don't want to go through and read the whole thing, I'm just looking at one thing. If I can find it, I'm going to wait. So basically what it says, since I'm not seeing, yeah, here it is. Bitcoin didn't get captured because the institutions forced their way in. Bitcoin was captured because the community begged for legitimacy. They celebrated the ETFs. You remember what I was saying, those who've been around, is like, you don't want these guys involved. I've worked as an arbitrager. I've worked as a market maker. You don't want us in there. And then also, they cheered the institutional adoption and mistook the centralization mistook the centralization of the float for global acceptance. So the LTHs, long-term holders, have, and that's with stocks or anything, you have no say-so in the pricing. You just believe it. You believe what you believe. You believe in the company. You believe in Bitcoin. But somebody else is controlling the price. This is on everything. I've been involved in, new offerings and small penny stocks. I've seen it all. They go through the same cycle. They spike up and then they go down. So let me just see here if I can find something, and I think I'll be done and we can move on. And we're going to go through some analysis on Bitcoin as well. Bear with me one second. Yeah, here it is. Let's take a quick look at this chart, and then I'll be ready to move on. We'll do Bitcoin up front here. So this is a monthly chart of Bitcoin. And if you really make it steep, it looks just like the tulip chart, okay? But I remember, and some of you have been around, can go back to 2023, May of 2023, when these Fibonacci targets came out. I remember basically saying, whenever these things come out of our indicators, this is the WaveTech Fib target. Anytime it comes out, I'm going to tell you about them because a lot of times they just get hit, even though they seem ridiculous. The targets were on May 1st, this is a monthly chart, so starts at the beginning of the month. May 1st, it was 80,105 and 120,892. And the ultimate high was just last month at 126. So way back in May of 23, this was the projection that was out there. We've satisfied those. And if I bring up the indicators, they're all starting to roll and fade. I can't run the algos, there's not enough data. But my point of this is that this thing has most likely run its cycle, and it, so people are going to go, oh, Bob's bearish. All I'm saying is that this is going to be a big consolidation here, and there's something going on here. I don't understand. I hope that if you have some opinions, you can, like I've always told you folks, I want your opinions and your ideas on any comments that you have, because that's how we all learn. You just don't get to don't call me names. I will delete the post if you call me a old man and I don't know what I'm talking about. I'm asking a question. I'm presenting something tonight, and what I tried to do with that 7-part article that I wrote is just try to talk about price discovery and talk about who's controlling what now. I didn't say it's going, I mentioned the number 74,000, I think, in the point as a target, and I've ended up finding out that Michael Saylor's average cost is 74,000. And I just always it concerns me that he always makes the point that it could go down 80%. I think he's trying to keep a panic from happening. I mean, MicroStrategies, who was it? Jim Chanos, I think, made probably the best trade of the year when MSTR was, he shorted it and bought Bitcoins. And if you look at that spread, it was huge winner. Bitcoin went up and MSTR went down. So anyway, I'm done with that. So let's go ahead. I'm going to come back up on screen. Let's talk about what's going on with this AI bubble and talk about what the possibilities are with the S&P, and I'm going to just kind of break down. We don't even know what fundamentals are. I was talking to a friend the other night, and I was saying, I usually write the Kendall report opinion, and it's hard to have an opinion because there's no flow, even though a lot of it is just noise that we get from the government agencies. The flow of information, it just, it's like I feel empty from the standpoint of having an opinion. I usually have good macro opinions and stuff. I just don't have them right now. When I try to figure out what's going on, it's kind of blank. So maybe those are consequences. So we're going to start seeing some data coming out. We already saw some today. We're going to see more. Everybody's focused on NVIDIA, which we'll go through analysis here. I'll probably condense this because I'm already 18 minutes in. But hopefully I made some sense here. I really, on this Bitcoin situation, I just don't understand what's going on. I don't claim to be a crypto guy. I do analysis on the technicals, but when I look at this thing seems blown out, and everybody's right at the top screaming to keep buying because it's going up forever. And like I said, millennials and Zoomers, they just think you buy this stuff and you hold it forever, and you're never going to have to work. I mean, boy, I wish my generation would have come up with something like that. That would maybe it would have been nice. But anyway, so let's go ahead and just talk a little bit about the markets and NVIDIA, just as general opinion. We'll bring up the screens. We'll go through everything. I'm not even going to look at the database. The short-term database is blowing out in full liquidation mode, and you can see what's happening with some of the with the indices. So we'll just go through the technicals here in a minute. But so we're probably never going to see October unemployment. Of course, one side of the aisle is saying they're hiding what's going on in the economy. I have no idea. Maybe I was wrong about the agencies still being open. Maybe they really were mostly shut down, and the data is so inaccurate it doesn't matter. It's going to be interesting. I hate gaps in charts or gaps in data, and that government data is something we never picture to actually having a gap, especially in something like, employment numbers. So that's going to be interesting going forward because we're going to have a gap. I remember when 9/11 happened, we only had one trading day. It was Monday of that week. And I remember having a group meeting with all my staff and people at the time. And we were trying to decide whether we're going to make the week go away, not ever happen, or if we're going to use that one data point, which was that Monday, as the weekly data, because a lot of stuff that we run in the WaveTech portfolio process involves weekly charts. So we need that weekly data point. So we went ahead and chose to go that Monday was the week. It really was the only day that traded that week. And so we used that one data point as a point to calculate all of our models and stuff off. So we left it in. So now we could have a circumstance where who knows how many reports are going to be actually compromised. And does it really matter? It's one data point. It depends on the type of analysis you're doing. And especially a quant like me, I'm always looking at looking at that consistent data, and data points, missing data points always bother me. Okay, so maybe that's my issue. So let's go ahead, and I'm going to put up we're going to start with the SPX because I want to do some longer term evaluation here. And I'm going to put an argument. Somebody on Discord the other day made a comment, and I'm going to address his comment, and he might even be on here. But let's go ahead and bring that up. So this is just the monthly S&P, and in fact, let me get off the screen. And this was the question that was asked: is it possible that
at the last few seconds he took his hand off?
Hang on.
3,
I
2,
don't-
1, and he was just saying, "Just run for your life. Just run for your life."
apologize, that video started earlier all by itself. I have no idea, never touched it. Anyway, so this was the question that was asked. The question that was asked is this potentially a fifth wave up? And let me get the drawing tool. And is this market really maybe at the end of its cycle? And this is what Bob Proctor's been talking about since probably 1986. He's had 5 super waves, maybe 10 different predictions of the top. Every one of these tops was it, and none of them have been it. But let's address this a little bit because I have interesting perspective I think will be helpful. So I'll bring up the drawing tool here, and what I want to show. So this would be an argument. This is going to be the argument, is that this would be wave 1. And then we're going to come over here. This is going to be 2 right here. And then 3, 4, and 5. I can tell you way back over here, this was at the 2008 and 9 situation. And this was where I thought it was potentially a wave 4. Well, it turns out this is probably a wave 2 of this sequence, and we have what you could count as 5 waves up. But I'm going to make an argument that this sequence right here is all one sequence, and I think it is a 3. So there's a couple characteristics. Elliott wave, quick pro tip here is that the fifth wave can be the longest wave, but typically wave 3 is. And if this was right here is going to be the wave 4 of this sequence. This is the wave, probably the end of the sequence of wave 5 of 3. If you don't know what that means, this big arrow here up is the 3, and then there's kind of a, let me do a different color. Hopefully this will make sense to everybody. Yeah, so this will be, there'll be like this is probably going to be 1, 2 here. There's going to be a running correction, wave 3, wave 4, and wave 5 of 3. So this is the subwave. And what would be next then is some kind of wave 4 correction. And this would involve the market grid on a monthly basis would set up around this pattern, like something like this. So you'd get this big wedge, you would trade in this sideways range. And by the way, this is such a big scale as this is like 2039. Okay, so I'm not here. You guys can tell me I'm wrong when I'm in the grave. But this would be a big pattern that was set up. Chances are it would run through early, probably 3032. This is just not to scale. And then we'd get a final 5th wave up, and then you'd get some kind of big decline. And wave 4 previous degree is way over here, like at 3,200 on the S&P, and that would be after it going to 9, 10,000, 12,000, who knows what the number would be at that time. So, so this big cycle that we're in now, you can see also we had some fib targets here. We're basically at fib target 2, so we're getting to the range where we are getting pretty frothy, and we need to consolidate these gains over the years. So I'm leading into this because this is the whole point of talking about the bubble. Yeah, I get so many errors. Let me clean this up. So I don't know if it'll be a bubble or not, but here's what I think will probably happen. We're probably near a peak and a big consolidation. If you look at it, we basically got a 12 plus year major bull market that's unfolded here. And during all the noise and the rhetoric of us following a market like this, we've been in bull and bear markets multiple times, and I don't go by the definition of a 20% decline. I actually look at the flow of the market, and in real terms, we had this corrective phase back in 2000. This was the consolidation of the .com era, and then we get this big blow up, and now we're seeing there was a service surge here. Then the next phase was technology was mixed in there, and then now we're coming into the AI era. So that is probably one of the biggest things as far as the markets go on a big macro scale of things of where we are. So we're probably close to some major consolidation to go on for multiple years. It's no signs that we've completed this particular sequence. Could run into 26. I'm gearing up to do my 2026 outlook. I'll be doing that probably last couple of weeks of the year. As you know, I usually take off the last couple of weeks. I will probably step back. I'm really not on a regular basis right now, but the newsletter will keep up, the Substack, so kendallreport.substack.com. You can get that there, $8 a month. It's a deal. I'm going to talk to somebody who's been posting trades from the daily sheets that have been pretty phenomenal. You get basically 2 trades on every market I cover every night, and soon I will have the ability for you folks to do the data sheets. Like I said, we've just run into just some monster issues, and recently Claude, who I now call Claudette, because it is Anthropic has pushed out the Sonnet 4.5, and it ruined their models. I don't even know if they are aware of how bad it is, and I'm not the only one complaining. But the bottom line is this big market cycle that we've been in is probably going to consolidate, I would suspect, for multiple years. There's going to be some great trades and a lot of new technologies. I suspect that the next couple of years will be, somewhat of a boom in many nuclear, we'll call micronuclear, and some of these other new technologies that are coming out, and maybe AI just consolidates. So that's pretty much it. Where am I at? I'm at 30 minutes. So let's do this. Let's go right to NVIDIA. Let's break that down on the charts and try to figure out how the earnings are going to affect things. And before I do that, though, I'm going to go back to a weekly chart on the S&P. We'll go back to the charts here. So I know I'm kind of different format than what I usually do. So bear with me. Yeah, so this is the weekly. This brings a little different perspective in. Let me bring up the algos and when we look at the monthly, it's hard to look out very far on the monthly, but when we look at the weekly, I talked about this trend maintenance mode. So this trend that we're seeing here, you can see the projections are into around June of 26, and this is why I'm talking about it's likely that this rally is going to continue to crawl along that wall of worry, and the chances are that the AI situation is not over yet, and there's more hype and there's more technology coming, and everybody's working. I think right now the knowledge in AI is doubling every 7 months roughly. So there's some new things coming that we don't know about yet, and we'll see how this all plays out. But you can see the trend on the intermediate continues probably into Q1, maybe Q2 of next year. So I'll cover this when I write my annual report as well. All right, so let's go ahead and we'll do NVIDIA and go through that. I want to go through, and then if you want to put out some, if you want to put out some other stocks to look at, maybe let's stay kind of on the AI theme of things. So we'll go from there, okay? We'll stick with the weekly, and we'll go over here to the, so here's the earnings report about to come up. Does it give us what they're expecting? Estimate one. I think everybody on the street is expecting these numbers to be blown out. I'm pretty sure that's a thing. So, but the question is how Jensen Huang handles the conference call tomorrow, and how they justify all the investments and things that they're doing, because there's plenty of people out there talking about another all these deals going in between OpenAI and NVIDIA and AI with OpenAI with other entities, and everybody's trading. Microsoft's doing deals with Anthropic, and Amazon's doing deals with Anthropic, and all this stuff. So they built this whole little circle cash flow thing, and that's got to be explained, and somebody has to ultimately take in account what kind of returns are going to come out of this. And this is the question that a lot of folks are asking now. So let's take a look at, and I think NVIDIA there's going to be some still kind of mixed downward pressure. into probably January, February, end of first quarter. But we've done something I've taught you folks about when you're using, if you have the indicators. If you don't, you can go to kendallreport.com/indicators, and you can put indicators 24 in case it gives you any kind of weird, especially after Cloudflare blew up today. I don't know that we were affected, but we use them for our URLs. But here's the key, and I'm blowing this up so you can see this well, but this big volatility bubble, I mean, these are very significant, and this is one of the biggest ones we've seen. So we are setting up, and you can see how the WTARs, this is the predictive math, is showing you what the moving averages are likely to do. And you can see after this big collapse down that this is setting up the tone for us coming into one of these wedges. So let me bring up the drawing tool here real quick. But yeah, look at this. Another tulip chart. So you do have an argument for, for some sort of bubble major top, and I'm going to do the same analysis that I just did for as far as the wave count goes. So this could be wave 1, 2. This is actually really clean. This is wave 3. A, B, C. You can make a new high and a B wave. It's which sets up, which this is like, I'm going to blow this out. Hang on, folks. I got what I want to draw is not going to work in this. All right, let's try it again. So this is probably a 1, 2 here, and then there's a sub breakdown to the top of wave 3. This is most likely A, B, C, and this sets up one of these that is, it's called a bugle formation, and most people, here I go again because I see it differently than everybody. I see this more as a bullish pattern. But you get, if you draw trend lines off the tops and bottoms here, you kind of get this expanding triangle. These are always bullish. In 1994 or 1998, one of these set up right before the dot-com rally. And this is just a classic. I could blow it up and get it more intimate with all the wave count and all that. But this formation, so this would be, we go back to this would then be, right here would be wave 4, and then we'd have a mini 1, 2 in here, 3, A, B, C, wave 5, and it ends here. I know this is not the best drawing. And then we see the forecast for all the WTARs, these are all the moving averages, are being forecast looking out actually all the way through 26 right now and into a downtrend. So if I blow up all this and clean it up, what's likely to happen is this formation, and this is what I'm leading into as far as we're going to get this market grid to have to contract. And so I'm going to do this, and then we'll change colors. We'll go to green is the bars. And then inside here will be bars that's set up, and the market will trade within this market grid, and it will start to contract. Now this is just conceptual. It's not where I think this market grid is going to be. But what will happen is once we get this to consolidate, and this is a weekly chart, this is going to take 2, 3, maybe as much as 4 months for this to happen. And then once we get the contraction and the normalization of the market grid, then we will see At that point in time is where you make the call for the next direction, whether it's going to go up or whether it's going to go down. And I suspect we're probably going to come back into a range that would look like probably somewhere in a range where whatever happens up here will come into this range and then maybe set up some kind of other pattern that we'll be able to determine. But it would argue that this probably is very close to a top on NVIDIA, and that we would, at least once we get into consolidation, if that happens, then we'll see another directional move. But this thing's played out as you would think, is played out pretty heavily. How are they going to be able to continue the revenue growth that they've seen? All that is going to be pretty tough. So I am going to just kind of call a large consolidation, and I'm going to pull this off so we can get some numbers. I'll put some numbers on this. Is probably maybe down to this lower level, down to 165 and up, whatever see what the high was here, 212. So like literally a range of 200, maybe it prints a new high, gets rejected, but we end up trading and maybe down to that 180, 175 range. These moving averages, especially this 40 coming up, will play into that. So let's go one more level. Let's go to level down and just break down on what it looks like for tomorrow. So a couple things happened here. We got some new fib targets up here, which are 214, 227, 236 on a daily. This could be what I call an island. If we get fewer than 3 of these fib targets on the upside, typically will be an island where we're not going to get we don't actually reach these numbers. They stop calculating because a low is taken off. I'm going to see if I can get this to come up here. All right, so I want to show you something here. So those of you that have the indicators have seen this, but where these arrows are, there's an algorithm that picks highs. You've probably seen the zigzag tool. This is way better. This actually picks the key patterns within. So we use this algorithm to within the trading models. We use it within a lot of indicators. There's Cycle Finder, the WaveTech Fibonacci, and all types of calculations that we use in different indicators. And what these do is just tell us where the high lows of the patterns are. And so when we've got this big pattern here, if we get another marked pattern up here, that will tell us a lot. These triangles give you a lot of insight where the lows are. Now, this one is coming 3 bars. It recognizes low over here on it. It found the actual low this is what, daily, 3 days after this low. So this was the pivot, and these calculations that you're seeing here in these green dots going forward were coming out of these marked lows that we have right here. So this is where the calculations are coming from. So the reason why I show you that is this on NVIDIA, if we can trade back above this moving average, then we get a marked high and then probably a swing down. So here's the 200-day moving average is 155. You could start a trend. You can see the algos are trending somewhat lower down to the 175 level I was identifying on the weekly chart. So it looks to me that maybe we get more consolidation, but it drifts lower, and we could break lower depending how this plays out. Possibly we'll get like a Fibonacci targets to the downside, which would give us, targets literally down in that 175, 170 and less. And so that is, that'll give you some pretty good ideas of where this is going. Let's go back to the algos. It's interesting, those of you familiar, there's not a clean V bottom here, but momentum is suggesting that we're going to see a bit of a rally. And I would tell you from everything, it looks like that we probably get some kind of year-end rally once this thing is completed. We get through get through next week, get through the holidays, then that will be most likely we set up some kind of year-end rally, and it's going to be led by the NVIDIAs and all the big, all the big stocks, all the Mag 7s. They're going to drive the show again. Not all of them, but most of them. So we'll probably see a bit of a rebound, and hopefully I'll have an opportunity. And I should have done this at the beginning. So if you don't follow me on Twitter, if you get the Substack, I'll make some reference to it because I will be out of town next week for the holiday. I'm actually leaving Friday, so there may be some disruption in the newsletter. I'm not going to be out all the week, but I'll put it in Substack. So get the free version of Substack because the top section and most of it is usually available to everyone if you don't want to go in, and there is a 7-day trial on it as well. But the bottom line is it looks like kind of flat to down. We've got some upward Fibonacci targets here as well. I just mentioned 214, 227, 230. I don't think we get up there, but that would just be a retest of the high. It looks to me that we do have some stair stepping up, momentum starting to improve. There's a little mixed picture here, but as far as what's likely to happen tomorrow, we'll probably see one of those reversal spikes where if it reacts negatively, then you can take the other side of that trade. So if you've been around the channel for a while, you'll know what that's all about. All right. Yeah, so Caleb, I would say that the chances, there's a higher probability right now that NVIDIA will go up. I think it's going to be somewhat limited. It's already off 12, 14% off of its last high. So there might be a retest. That's what the Fib targets are saying there. All right, let me look at some of the comments here, guys and gals. Yeah, I couldn't argue. David Ford says, follow the recent times, when it's short-lived, but we have a black swan. Possibly, who knows? There's always lots of stuff going on. Yeah, and I didn't really address the Fed. Let me do something here. Yeah, we've got a minute. It's interesting because the Fed's talking somewhat. I would say they're a little bit negative what's coming out there, but meanwhile, supposedly we're going to get the September employment numbers. Employment is supposedly imploding, but somehow the Fed's not going to lower rates. But I will tell you this, and I've said this for 2 years, is that the Fed situation has nothing. We're not in a loosening or dovish pattern with the Fed right now. Yes, they've dropped rates, but if you look at yields, they're flat. You got the Fed funds at 4, and you go all the way to the 10, they're 4.19. It's a flat yield curve. I'm still arguing my steepening yield curve, where they're going to keep dropping the front end to get the steepness in the yield curve. Well, it will be perceived that they're being accommodative, and we're somehow in this new QE cycle. We are not. I don't think that's the case. I think they're doing exactly what they've been doing for the last 2 years, is trying to get the steepening yield curve, and they're just being very, very cautious about it of course, Powell and Trump hate each other, so he's not going to drop rates too much as he rides off into the sunset. But I'll make that quick comment here. Yeah, 233. Yeah. Yeah, like this. Buy Bitcoin, you might want to get in case it catches on. If you read my article, you'll know that when it gets over 100, 110, these arbitrageurs and all the ETF guys, they're going to burn. They're going to burn so many trades. They will churn this thing. And in fact, if let me go back real quick. Let's put Bitcoin up. So this is, let me go to weekly because it's very, very obvious. And I've been screaming this on Substack for a while. If you look at this pattern that unfolded here, this is your ETF and your arbitrageurs. Sorry, this wheel turns too fast. All of this action up here at a, one over 100, 114, 126. This is what distribution looks like. Looks like what it looks like when market makers are in. If there were no market makers, no ETFs, you'd probably be at 200,000 on Bitcoin right now. You're not there because these guys are churning. They're churning all that order flow. They know how to work order flow. I've been, that's why a lot of times, if those of you in the old live trading room, I watch the order book to trade. I glance at the charts, get a feeling, but watch the order book for entry points and all that. I've been on ARB desk. I know I know what distribution looks like, and I've been screaming, this looks more like distribution. And the algos pick this, mark this. This is a marked top now. Until we get a marked bottom, we're going to be probably under negative. There's 3 Fibonacci targets on the downside. 91, 380. If I brought up a daily, we hit last night the daily Fib target 1, which was 89,300 and something. I'll show it to you real quick while we've got this up. But this right here, we're going to here 102, 300. There's going to be so much supply there. These ARB guys, they've created this illiquidity for this drop. Now they're backing off. They're going to let it come back up, and they're going to be hammering 103, somewhere in that range, 103, 105. It's going to be a wall or a ceiling in this case, and you'll continue to probably trade along this line into, what does that bring us into? February, March. So this thing got broken pretty good, and it doesn't have to just collapse and keep going down. I don't think 74 happens here. If anything, you still have the 200-week moving average is at 56,000. So, yeah, let me look and see what other kind of comments are out there. Yeah, I mean, think about that. What would have to happen for BTC to be at 220K in 45 days? That's what, 100% rally, more. Yeah, good luck. Yeah, Learn to run a node and transact Bitcoin before you're trying to tell other people about Bitcoin. Okay. I'm just telling you, brought to Wall Street, arbitragers, and the ETF guys. That's me. It's very obvious what's going on. They just trashed everybody that didn't understand what I wrote in that article. Yeah, yeah. I was just reading Bonita. Yeah, that is true. Yeah, it's fun watching my Hoosiers. I got a bye this week. Let's just see if there's anything else. Okay. All right. Well, I'll come back up and we'll just end this thing. Yeah. Anyway, we'll see how this all plays out. I might have some time to come up tomorrow after we get the NVIDIA. If I can, I've been putting out notifications on Twitter. Or X. I'm at Portfolio Expert. So /portfolio expert, but there's no E in expert. So it's portfolio and then just XPERT. So yeah, listen, tonight this was kind of a random meeting that we put together tonight just to kind of talk about some things. Like I said, I don't know what's going on with Bitcoin. I don't claim to be a crypto bro or know all the stuff. And it appears to me everybody is talking about $1 million, and I mean, they're just making it up. There's no basis for anything to predict that. It's a non-producing asset, and like I put in the article, scarcity is not an argument. Lots of things are scarce, even though they can't create more. And most of the mining's been done that can be done. So the mining operations there's just incremental stuff that compared to what it was like, I don't know, 5-8 years ago or more. There was some pretty good opportunities in there. I was looking at starting a little mining operation at one stage. But the point is there's just an awful lot of hype. And if you believe it and it works, good on you. I mean, congratulations. Listen, I'm at the end of the cycle of life. So this is for all you kids to figure out. And I mean kids in a derogatory way. But the point is that it'll be the first investment ever in man that something was created and everybody adopted it and everybody got rich. Just saying. I've never seen one. And I've been pretty deep into these markets for a lot, 4.5 decades. Doesn't mean anything other than I've watched all of the evolution of the markets go from analog, me and my buddy standing in the pits, yelling and screaming and spitting on each other to trade, to all tickets being paper and handheld, run by runners and all this stuff, to going to decimalization, to digitized. And very few guys have made the digital transition like I have as far as trading. A lot of older guys just didn't get it. And so all I'm saying is I understand these operations. I know how they function. I know what they're capable of. If you get control of most of the float, not all of it, you can provide liquidity or illiquidity at will. And especially all these guys know the game. So they basically what we've been watching is going back to what was it, that October 5th or 7th or whatever was that big liquidation. Basically, that in itself was a warning that the Bitcoin was in trouble. A lot of leverage around it and people getting in liquidation, and that was a big event. And that possibly broke and gave up. That's where I think that event is where these market makers and arbitragers got real control of the float. There was a lot of paper floating around, so to speak, and they got control of it. So now, like I said, foot's off the table. Let the liquidity come back. Let the buyers come. Let push up price somewhere 103, 105 max. They're coming again. There's another wave, and it'll be interesting. Even though Michael Saylor is telling you that all of that stuff's out and the tourist and all that stuff. He's hoping he's right, because I think if we do go down below 74, I'm not saying we will, I'm saying if we go through there, that will cause a real illiquidity in the system that, like I described in that piece that I wrote yesterday, is once you get to that level and the bids disappear, market's going down a lot faster than they go up. And the reason for it is that once the buyers get scared, the LTHs, long-term holders, they're totally not relevant at all if they're going to hold no matter what. But if you spook them and they lose the ideology a little bit, it only takes about 15-20% of long-term holders to start to get out, and that's where you get the real turmoil. Not saying it's going to happen. Don't say Kendall said this was going to happen. I'm not saying if these events and these triggers happen, then you will see. We've seen it in the markets all the time, and when you see the 2% and 3% days, you see those momentarily. I've lived through markets that most of you have only read about, like 87 crash was one of my best calls of my life. 2008 wasn't bad, but I wrote a letter on September 16th, 1987. The risk reward in owning stocks in the U.S. was zero. Get out. That was the headline. And I wasn't predicting a crash, but I was telling you that we were very frothy at that time. And we're certainly, if you look at the chart that I started with earlier, if you joined late, go back and watch the replay when we went through the S&P, and it's vertical, just like the Bitcoin. Everything's vertical, and I call it the Jim Cramer trade, right? When I don't know what Cramer's saying. If Cramer's bullish on Bitcoin, then we're really in trouble. But the Cramer trade is buy high, sell higher. And, sometimes it works. It's worked in NVIDIA for a while. But like I said, I see a setup where a fairly intermediate term consolidation in all these stocks. And during those times, there's always vulnerability to things that can happen. And we certainly have plenty of things. We've got midterms coming in 2026. So looks like to me that we're probably going to consolidate into that time. We could still make a new high in the big indexes and all that. And I don't see a crash. I don't see the bubble in the AI, but I do see some retracement on all these stocks. Anyway, folks, that's it. Thanks for showing up on a moment's notice. Hit the notification bell so you'll know that's probably the best right now. I'm not on a regular schedule like I used to do every day. So anyway, thanks again. I appreciate everybody coming, and have a great rest of your evening, and we'll see you real soon. Maybe tomorrow.